Good morning to everyone, and thank you for inviting me to speak here today. What I'd like to do is give a very hopefully short and insightful view on how to interact with the 3Cs fund. So first of all, let me introduce myself. I'm part of the origination team at Amber Infrastructure Group. We are the investment advisor to the 3Cs fund. So our job is to find potential investments, assess them, make those investments, and then manage them thereafter all the way through to exit in 15 to 20 years' time. That's the job of Amber within the 3Cs Initiative Investment Fund. So let me find my first slide. So first of all, what I'm going to do is say a few words about Amber so that everyone knows who we are, what we do, and I think why we were appointed as the investment advisor to the fund. So we are an infrastructure fund management specialist. That's what we do. We are London headquartered, but we operate around the world. We have offices in North America, around Europe, increasingly in Central and Eastern Europe with the appointment to the 3Cs fund, and in Australia as well. And the Amber business was originally, it came out of a specialist fund called Babcock and Brown, that was again an infrastructure specialist in all the way through the 2000s. So there's a long history of investing in infrastructure, all the way from greenfield projects where we have particular expertise through to asset management where we have a very substantial asset management team. There's every little bit of the process from making an investment to managing that investment to exit is equally important. And if you look at the Amber team, we have over 150 people pretty well equally spread between the various different operations that make fund management in infrastructure successful. We manage about 5 billion euros of funds, of which 1 billion is the 3Cs Initiative Investment Fund. And we are very much committed to being at the forefront of ESG in the investments we make. I think it's increasingly important that if funds want to be successful over the long term and raise capital, it's increasingly important that we look at the environmental, social and governance aspects of everything we do, the way we operate the fund, the way we make investments, the way we manage those investments, and I think that's just good business to make sure that we are at the leading edge of that. So that's a little bit about Amber. I think what everyone wants to hear more about is the fund itself. But before I do that, just to introduce you briefly to the team we have. So at the top of this slide is the regional team, which I'm a part, and we've been building that team since appointment in February 2020. We now have offices in Warsaw, Prague, and Vienna, with most of the team being based in Warsaw. And that team is complemented by the specialists we have in London and Germany and other offices, both on the origination side, where we can bring in significant expertise to particular investments, but also on the legal side as well, with our legal team based in London who help us to make investments and manage them. And then finally, we have the investment committee, which Paul, I think, and Beata mentioned, which makes the investment decisions and recommendations to the fund manager. And we have 2 appointees on that. There are 2 independents and 1 appointed by the AFM Fuchs in Luxembourg. So all investment decisions go through this investment committee, and it's the fund makes purely commercial investment decisions. I like to say that we are politically inspired but commercially driven. So I think that's great comfort to investors and investees alike, that this is a professional fund management operation that runs the fund. So moving on a little bit to the fund itself, I think perhaps, and this has been said a number of times by a number of speakers, but I think it is incredibly important. The 3Cs region offers an almost unique opportunity to investors, I believe. It is a significant part of Europe, as we've heard from various people, and there are lots of nice numbers on this slide that demonstrate that. What's equally important, though, is that because of its growth potential and the convergence with Western Europe, it offers investors very significant returns that are very hard to achieve in comparable geographies. Now that is a relatively short-term opportunity, but nonetheless it is an opportunity. And one of the key things that I believe the 3Cs Initiative Investment Fund will do is demonstrate the ability to make returns above the levels on a risk-adjusted basis that are available in Western and Northern Europe, and encourage more private capital to invest in infrastructure in this region. And I think that's very important because even if we were to reach our 5 billion target, on our own, we are a very small part of the infrastructure need. I've seen various numbers, 500 billion, 600 billion. I think they're all an underestimate, actually. This region needs very significant investment. One fund isn't going to make the difference, but one fund can leverage more capital. So when we make an investment, we tend to bring debt capital alongside us, so that increases the amount of capital we're deploying. And I think perhaps more importantly, as we're perceived by the market to be successful, other private capital will flow into the region. Now, private capital is not the only way of funding infrastructure, but it is an important part of it. And so as we have seen in Western and Northern Europe, historically, I've made investments where there were, in the old days, ERDF grants involved providing grant capital alongside private investment. That's one model. It's clearly the case, and my favorite example is rail. It's clearly the case that there's a significant amount of public capital going into upgrading rail infrastructure in the region. I'm going to mention Poland because it's the only number I can remember at the moment, but I think Poland has invested 13 billion euros in rail infrastructure over the last 5 years, and there's another 13 billion over the next 5 years. Now that's largely investment in track and signalling. Where private capital can complement that very nicely is by providing capital to upgrade rolling stock and provide modern locomotives. And that was our first investment in cargo unit, was designed to complement that EU and government capital flowing into the rail sector by providing modern rolling stock to run across those upgraded tracks more efficiently, environmentally better, and also to help move the flow of goods, in particular from road to rail, and try to build those multimodal cross-country links in the 3Cs region. So that was, I think, a great example of how public capital and private capital can complement one another. The most important thing being there is no shortage of opportunity, and it's quite clearly the case that funds coming into the region today can make returns which are a premium to other parts of Europe. Now, that should converge over time, and that will also decrease the cost of capital for infrastructure in the region. So this is I think one of a slightly corny expression, but it is a win-win for capital and the countries and their infrastructure. So a huge opportunity. Just moving on to the 3Cs fund itself, I won't repeat what's been said before, but I will highlight the fact that we are a fund that specializes solely in the countries within the 3Cs region. We cannot get distracted by investments outside the region. And I think that's very important because the capital that's raised for this fund will be invested in the region. There is no option for us to go elsewhere. And I think that also gives us an opportunity as the fund to find the best infrastructure investments within the region. So just to talk a little bit about what it is we're looking for. So first of all, we have 3 sectors we operate in: energy, transport, and digital infrastructure, and I'll talk a little bit more of those in a couple of slides. We're looking for equity returns. We're an equity fund, so our target return are low to mid-teens over a long period of time. So we are there to make money for our investors by investing in infrastructure. We're not a grant fund, we're not a debt fund, we're an equity fund. So we're part of the mix of capital that should be available to all countries in Europe for funding infrastructure investment. We invest solely within the 3Cs region. We can make investments where there's a neighboring country involved. We can make investments in one country, but we always need to demonstrate that there is some greater benefit either to connectivity or addressing the infrastructure deficit. We invest largely 50 to 250 million euros at the moment. As the fund size grows, we can increase that investment amount. and we can also bring co-investment, which is where investors in the fund also make direct investments alongside it in to increase the amount of capital we have available. Essentially, what we're looking for is good investments, so we don't mind whether we are a controlling shareholder. In the case of Cargo Unit, our first investment, we are a 100% shareholder. In the case of Green Energy, the data center in Estonia, we are a significant majority, 95% investor. But we will take minority stakes as well, as long as we are have sufficient investor protection. And what we're really looking for is strong partnerships with either management teams or other investors or government to provide capital and then deliver infrastructure assets over the long term. In terms of our investment criteria, there's a nice little chart on the right. I think it's probably easiest to say what we won't do. We won't take development risk. We are not a developer of assets. We will take greenfield risk. We will get involved at the beginning of construction or the very end of development and provide equity capital, but we won't provide capital purely for development purposes. We want to see ready to build or permitted projects or existing assets that have very significant capital expenditure requirements. We are permitted to make some brownfield investments, but that's we haven't done to date, and it's a very small part of the fund. And what we are trying to do is we're trying to improve connectivity and cooperation throughout the 3Cs region when we make those investments. We're trying to accelerate economic development by providing core infrastructure. I think Beata made the point very well that core infrastructure really does drive long-term growth of GDP. So that's part of what we're doing. And we're investing in these infrastructure assets, supply critical long-term assets, capital expenditure heavy. Things that people have to have and use over a long period of time. So what we would like to see is we like to see regulated or contracted revenue streams. So we don't like pure market risk. We want revenue streams that are predictable and forecastable over long periods of time. We don't mind GDP exposure to some degree, and we're happy with inflation correlation. But we don't want pure market risk, demand risk. That's not an infrastructure asset. We want to see high barriers to entry. You know, when you invest in infrastructure, you're putting a lot of capital into something, and you want to make sure that you know there isn't a competing asset next door in the short term, because we need that period of time to make our returns. We like to see substantial growth or expansion potential in the assets that we are investing in. Cargo Unit being a case in point where, you know, we'd like to see it expand across the region, geographically as well as within Poland. And Green Energy again is another example. As a data center in Estonia, we have expansion capability within the Baltics, but we'd also like to replicate that elsewhere in the 3Cs region by building new state-of-the-art data centers. Finally, what we really want to see is a team that's capable of delivering these complex projects. Infrastructure is complex. It's why there are always so many stories about cost overruns on construction projects of scale, because they're difficult. They take many years. They take a lot of planning. It doesn't always go according to plan, but one of the great skills I think we have within the fund and within Amber is the ability to effectively manage construction and bring projects to a successful conclusion. So that's a sort of brief overview of the investment criteria. Just to move on and talk a little bit about the three sectors, as I promised I would do. So first of all, transport. So our main focus area in transport is road, rail, rolling stock, ports and airports. I think these are all core assets. What we are seeing absolutely is this clear demand for north-south connectivity, clear demand for port infrastructure to be upgraded, clear demand for modern rolling stock. You know, I've experienced the difference in travel times as I've started moving around the region. You know, I love taking trains, and when I was trying to travel from Vienna to Bucharest, I thought I'd take the train, but the train takes 22 hours, and you know that's clearly not acceptable for the long term in this region, and there's very significant latent demand for this type of transport infrastructure. So to date, we've made one investment in transport, which is Cargo Unit. Turning to energy, I think you know, we have actually made our first renewable energy investment, but we haven't announced it yet because it should close later this week. But I think renewable energy is clearly an area of focus for this fund. It is very important that that all the countries in the region have access to generation assets that in wind and solar in particular. So that's a key area of focus within energy. We're also focused on gas generation. It is absolutely clear that for many countries in the region, there needs to be a transition from coal generation through to cleaner forms of energy generation. And the obvious first step to replace coal in the short term is gas. Now, that is well within the fund's investment criteria, and I think it's an important part of what we're doing. So gas generation, modern gas generation, with a path through to either hydrogen mix in the gas or cleaner gas generation is very important for the fund. Again, as part of that, LNG facilities are important. There are a number of LNG priority projects. I'm going to mispronounce all of them, but Kirk in Croatia, Klaipeda, Polinski, and the Tallinn in the Baltics. So, you know, LNG, the flows of LNG around the region are very important, both in terms of that move to gas infrastructure and gas generation, but also in terms of energy security for the region, which I think is another key theme of the 3Cs initiative itself. And finally, we are able to invest in the things through which energy flows, so electricity and gas pipelines, and they're again key themes for us. Moving on to digital, my personal view is digital is a massive opportunity for the 3Cs region. I think that you know, we have three main focus areas, which is data centers, where we've made our first investment, fiber networks, and telecom, wireless telecommunications such as 5G. My personal view is that the opportunity is here to if countries invest in this digital infrastructure, to reverse some of the brain drain that has historically occurred to some of the major centres, either out with the region or to the major cities within the region, and build the opportunity for people to live and work in communities outside major cities. I think that's a real opportunity. I think it's also a commercial opportunity for companies and funds such as the 3Cs fund. So again, digital is a key part of our strategy, and you know, serendipitously, I'd like to say by design, but serendipitously we've now made one investment in each sector. So we're quite pleased with ourselves, actually, if I'm being honest. So that's the three sectors we invest in. This is a little summary of our pipeline. I've been working in infrastructure for over 30 years. I started when I was very young, and I think that
you still look so.
I think that was the Reiki last night. But what I'm absolutely astonished by is the amount of pipeline opportunity there is. I mean, I shouldn't be, because the numbers tell you there should be great opportunity, but the reality is also the same. We've seen over 130 opportunities to date. We are genuinely struggling to keep up with the flow of potential investments into the fund. And I think that's actually a very good positive story, both for the fund itself and other private capital coming to the region. There is plenty of opportunity here. So I think we have no doubt whatsoever that those opportunities will continue to arrive. I think what's also been very important is the shareholders generally have been very helpful in introducing us to opportunities throughout the region. And you know, as we build those relationships with the shareholders, I think that again is a real positive for the 3Cs Initiative Investment Fund. We get access to high quality pipeline projects, and we have good local partners who can help us navigate the local environment and make sure we can carry out our diligence very effectively. So I promise you this is my final slide. What is it people need to do if they want capital from the fund? Well, I think the first point to make is we run a very rigorous and careful process of assessing potential investments. Diligence is very important. You know, in these transactions, you are making very significant equity investments with a very long payback period. So if you get it a little bit wrong, it can go quite badly wrong in terms of investment returns. So this is not a simple process. There is a lot of diligence. I don't say that to put people off approaching us. I just say it so that people know that they have to be very well prepared when they come and approach the fund. And investments take a long time. I mean, in my experience, I always say it approximately takes a year from start to finish. But you know, we've made investments faster than that. I think actually for the 3Cs fund, we made our first 2 investments within the first 10, 11 months. We made our first 3 in total within, I'd like to say a year, but it's 14 months. But I think that's gone relatively quickly. But 9 to 15 months is the amount of time from the first approach to a successful investment. I've talked about the sectors. I've talked about the geography. You know, we can invest in one country, but we do have to show those benefits across the region to more than one country. We also can invest in a 3Cs country where there's a neighboring country involved to some degree, but again, we have to show the benefits across the region. As I've said, we want to see ready to build or existing assets with significant capital expenditure. We can't do pure development. We want to see that, you know, revenue model. Where is the revenue going to come from? What causes it to be variable? How much is contracted? We want to see the good management team and advisors in place to both manage a project and then manage the business thereafter of running that asset. And as I said before, our size is approximately 50 to 250 million. Now, we can make smaller investments. One of the fund's obligations is to build a geographically diverse portfolio. So we will always take into account for the smaller GDP economies the ability to make a smaller investment, because the geographical diversification is important to the fund's returns and its shareholders. And then what would we like to see? Well, the first thing is we'd like to see some sort of a plan. It doesn't have to be a final plan, but what we'd like to see is a plan that states what the asset is, how it's going to be constructed, or how it operates today, some broad financial figures about the returns, and some third-party diligence or validation of the key assumptions. That's what we want to see from projects and companies when they approach us. And finally, you know, part of our role is, you know, to originate these potential investments. So where possible, it's you know, we encourage people to speak directly to us. Obviously, if they have existing relationships with the shareholders of the fund, then obviously they can provide introductions to us if you can't find us. But I think it's on that note, we're quite easy to find, and if anyone does want to speak to us, please, we're always happy to discuss potential projects within the region. And on a final note, I'd say that in my 33 years of working, this is perhaps one of the most exciting initiatives I've been involved in, and I think all of us at Amber are very pleased that we were chosen as the investment advisor to the fund. It is a great opportunity for all of us, and I think over the course of the first year, we've proven that as a team, both shareholders, management board, supervisory board, Amber and the other advisors, we've begun to deliver good investments on the ground in a very short period of time, and I have no doubt that will continue to be the case. Thank you.